Meantime, Apple unveiling new software updates of its worldwide developer conference. Things like improved email privacy and FaceTime functionality. iPhone users will likely be happy, though, about some of those changes. But what about investors? Joining us right now to break down that is Tony Sacconaghi, senior research analyst at Bernstein. Tony, what do you think?
Look, everything sounded good. I don't think it ultimately changes investor opinions. The developers conference is really for developers. The keynote highlights some improvement that Apple has developed over the last year. And look, I think there's incremental functionality. I'm not sure we're going to get someone switching from Android to Apple as a result of new features launched yesterday.
One of the interesting features, though, they did launch, and it's something they historically have tried to avoid doing, is effectively opened up the FaceTime app so that people on Androids can use it. And the question is, does that create a bigger ecosystem for Apple, or does that create more churn to Android?
Yeah, I mean, look, I think in hindsight, FaceTime was a easy to use video conferencing technology when it was first introduced. And as we reflect on how popular Zoom has been, particularly over the last couple of years, one can't help thinking what a shame it was that perhaps Apple had not opened up FaceTime to other platforms before, and that maybe that could have been in and of itself a truly unique and defining service for Apple that ultimately maybe it would have found ways to monetize. I think to your question, it's hard to say. What we've observed is that ecosystems are generally pretty sticky. So repurchase rates on iPhone are pretty high. Repurchase rates on Android are relatively high. There's big churn among Android vendors, just like there's big churn from one PC vendor to another. But there isn't a ton of churn between Mac and Windows, and there isn't a ton of churn between Android and iOS. And so I don't think that feature either way, quite frankly, is going to have a material impact.
Tony, how do you think about the stock right now? It has underperformed this year. Obviously, was on a bit of a rocket last year during the pandemic. A lot of folks holding it right now, trying to figure out what to do.
Sure. So you're absolutely right. The stock was up 70% last year. And it, at the beginning of this year was trading at about 32 times future earnings. That's really the highest that Apple's traded in the last 7 years since it stopped growing at 30–40% per year. So the stock was richly valued relative to its history. And it's had tremendous numbers this year. Numbers have gone up. And the stock, as you mentioned, has underperformed. And I think there's two things that investors are struggling with. One is, what is the right valuation for Apple? So it's trading at 23 times earnings. That's a modest premium to the market right now. It's still a little bit high versus its history. Apple, over the last 5–6 years, on average, has traded at about a market multiple. But one could argue it's a better company. It has a higher services revenue mix, and services is a better set of businesses. I think the other thing that investors are struggling with is, what might next year bring? As strong a year as Apple is having this year, the worry is that much of the growth for Mac and iPads has been pandemic fueled, and that the iPhone cycle is a pretty strong cycle, particularly with regard to average selling prices. And so I talk to investors who worry that Apple's revenues could be down 5% or more next year. Now that's a more extreme view, but there is real question marks about, of how Apple might fare compared to a very strong year this year. And so it's a combination of those two things that the market is trying to work out right now. We feel better about the valuation, gone from 32 times to 23 times, but we're still a little nervous that estimates, particularly for revenue growth for next year, might be a little high.
Shepard Smith here. Thanks for watching CNBC on YouTube.